Hey, good morning everyone. Good to see you all today. Welcome to the PivotBoss Premium Trading Room. Today is Tuesday, April 17th, 2018. Right now we're seeing a little bit of weakness here in the ES and the NQ right at the open. We'll pull back to value here, V Wep in the ES, not quite there in the NQ, but getting close. Crude oil trending lower after breaking down below 66s here, clear support at around 66.15. That took offered earlier and was the retest was also taken offered, and this thing's trending lower. I mentioned earlier 65.46, the next quick target down, pulling back into the trigger zone yet again, but we were holding here before the recent drop. So right now a little bit of weakness here, but this could, we'll see if this becomes a buying opportunity off the overnight pivot or the LVM below. Basically this section right here is the zone where bulls would want to defend in this scenario for the ES. So if we take a look here, let's bring this over here. Right here, that's a big hole right there in a 5-day profile. It took VPOC bid, gapped above it, held it, and then took off here. And now it's really run through that zone, which was defended here. So again, if that were to be retested again, that's an opportunity to return it back toward 2,700. That could be a short-term move of about 10 to 15 handles, depending upon how low it gets there, back to 2,700. 2,703 is the midpoint of the key range. It's about right there. That's going to be an important level there. But just the fact that we have successfully pushed through 69.25 right there and reaching as high as 26.99.5, I mean, that's a really solid move here. Remember, we mentioned if this thing can get above 69.25, we could be a full-on move into the March 21st FOMC key level above. And again, that that level could be reached sooner than later here because you know, again, 27.31, that could be reached in one day given recent 10-day average range. Now the 10-day average range has shrunk quite a bit here. We were trading about 66 handles of range on a 10-day basis and a 5-day basis just last week. That's dropped already very quickly to 47 points on a 10-day and 37 points on a 5-day. So the volatility is dropping a bit here. So you don't want to overshoot your targets. It's been very, very quiet, and obviously the thing is kind of coiled up into an ascending wedge, but these have been mostly trending up, and today could be the day where we get much more strength and elongated type of profile where it's a price discovery phase. So this pullback right here being defended didn't even quite get all the way down. Holding off value here. We didn't even test value in the NQ. But again, if these get started, they could really start to push up, especially the NQ here. Holding above 66.53 is very important. And this one is continuing higher. So we could be on the way up. I did take Roku off the table. You know, this one was a nice gap up due to the news in overnight trading. It got as high as 36.87 this morning. Let me pull that up. I did take that off. So this one played out right according to plan, which is what I mentioned earlier. You know, maybe I visualized this one way too much, and that's why. But for the most part, the idea, remember, this one pushed below that 30 LVN, CLVN. This was more of a market structure play. Here's the IPO and pops higher. It creates a CLVN and races higher. So it finally dropped back below that market structure zone. And typically speaking, you're going to make your way back up toward the bottom of that market structure, which is 38.84. So we were shooting for 38 to 39 on this move because of pure market structure. Additionally, you know, on this bar here, you can see it's blue. That's when the body percentage starts to go back above the 35% level, and that starts to indicate that you're about to see movement, volatility. And in this case here, we were holding right off the previous month's close. That was the entry. So that was the entry that we were looking for, and that's where I did two things here. So basically that's the entry there. You take this thing bid. That's a stop run day, right? It opened on a low and then it closed way above the 2-day highs, It was a huge day. Look how big it is. It also coincides with going above that body percent average, which is an indication that volatility is about to increase. So all that combined leads me to believe that this is the ideal entry point in that scenario. And so on that day when price hit that point, I did two things. I sold the 32 put, so I sold that one, and then I bought the 29 for protection. So I created a put credit spread that I sold. And remember, when price closed initially, it was here above 32s. So when I did all my analysis, it was with the intention of selling that 32, even though it was in the money here. By the time it gets to my entry, it will be slightly out of the money, and you can actually get a little bit more premium out of it in that case. But you have to be very confident, right? And right here, price holds off that previous month's close. One day gets a little lower and then starts to, just hold. And that's what I mentioned. As long as it's holding here, it's absorption, and that should lead to a pop at some point. And the idea is that since I sold the put credit spread here, I like less than 15 days usually to expiration. Expiration is this Friday. I think when I did it was 12 days. And I also, in addition, because I was very confident that we would see a push up due to market structure, I also at the time bought the 30 in the money call as well. So the in the money 30 call, I bought it right here. And that one, I was looking for a quick pop to take that one off, followed by letting the put credit spread expire worthless. And this one took a little bit longer to get going, but with the news that Roku is going to be offering ESPN Plus, the new streaming service, which is $4.99 a month. But from my understanding, while it's a big deal, it's not really a big deal because I don't think they're going to be offering any of their cable programming, like Nothing That Matters. I think it's going to be different or new stuff. So I'm not really sure, but what that package entails. But I think the market liked it, and a nice gap up. In this case, I intended to take the in the money off quicker than not, and since we're just very close to expiration on that one, the most risk oftentimes in a directional play like that is after a pop, because as soon as it starts to go against you, that premium starts to shrink. So I just went ahead and took it right off here when it was around 35.20s or so, and yeah, but for the most part still looks good. I still believe that we will be going to this target. It's just because it took a little bit longer to play out. We're close to expiration, so I'm just taking that gift horse right now. And at the same time, what I really like about the way that I approached it is, again, I sold this put credit spread here, and even though price basically just went sideways and to slightly up, this one's still in the max profit territory. Even throughout all that sideways to up, it was still max profit for that play. And so, because it's still above here, right? And even my break even was still way down here somewhere. So that one, again, that tells you right there that sometimes these don't do this right away like you expect. Sometimes they go this way. So in those scenarios, you can still structure a strategy that allows you to take advantage of that play in that way. So that's how I played Roku here, two different ways. Nice little pop up, going ahead and taking that one off the table. Etsy is one here that pulled back pretty heavy on Friday. Yesterday was a digestion day, and it closed just below the midpoint of the stop run day. It also had this previous support was resistance, and that's helping bring some sellers in. This was a digestion day, so after a big move like this, that right there is a extreme reversal signal. So if I bring up signals here, there's a signal right there, and that signal is the extreme reversal signal. It's that one. And this is the one I wrote about in the book, Secrets of a Pivot Boss, Chapter 2. The one that I coded up so long ago, that was my first huge algorithm that just made great money, especially in the energy markets. Put us long time and time again throughout an uptrend, throughout when crude was reaching 130s. It was just a big time pattern, and it continues to show up time and time again. Higher the time frame, the better. So this is a really good indication here. And again, if this thing can start to get above 30, there's at least another shot to go higher. And I remember this one, the expiration is at the end of May here, and earnings is May 1st. So this one I bought in here with the expectation, and it was an out of the money 30, right? That was an out of the money 30 call. And this one, the idea was that heading into that event, we would start to break up. All of this was super compressed, and suggested we were about to see a breakout. So I entered ahead of the breakout. But then Friday was pretty significant on the way down. But as long as we held the the 29 here, the idea is we continue higher. So, and this one has plenty of time, 31 days left to expiration, and then still at least another 10 days or so until this date. So holding on to this one for at least one more leg as it continues higher. But we'll keep an eye on that one. I mentioned Amazon earlier as well. 1460 is the level right here. 1460 is a zone that has basically been resistance while higher lows were coming into play, and then you got this compression, as you can see by the color, and now you're starting to break above 1460. So I mentioned earlier yesterday and this morning pre-market that if we get above 1460, that opens up about a 90 to 100 point move into 1550 to 1560. That's where we could be headed right there. You know, I don't know if we get all the way to the recent highs, but somewhere in this zone could be easily achievable, and that's a pretty significant move. We do have earnings coming up in next week. I think that's next Thursday or so, and so that could be again an opportunity for this thing to rally into earnings. So yeah, that's one to keep an eye on right now. We have others that have broken as well. Let's see, Netflix is one. Let me check over here. Look at this bounce back. Wow. Fell just shy here and then bounced almost all the way back to V Wep. I tell you, that beer's looking good. I got the beer in the fermenter, and it's the active fermentation started very quickly. I had to, and you know, this is a high gravity beer. The starting gravity is 1.083, which measures it out to be about between a 9.5 and a 10.5% potential alcohol content on that beer. It's a Belgian Tripel, and it's a hybrid with an IPA. So I did a hybrid beer, and it's one of my favorite hybrids to make. And in order to create that beer, you have to do a yeast starter, or you have to pitch 2 or 3 times the yeast. So instead, I buy 1 yeast packet, and then I create a yeast starter, and I let the yeast starter go for at least 2 days. And it creates some super healthy yeast, and when I pitch it, man, they're ready to eat. So the active fermentation process is always fun to watch, the bubbling that happens inside, and then I have to do a blow-off valve because the fermentation is so aggressive. Sometimes it could spill over unless you do it properly. So it's looking pretty good. I'm excited. It's been way too long. There was always something stopping me from doing it, but that's right, volcanic explosive. It just starts coming out the top, right? And all that stuff starts spewing everywhere. Yeah, no. The first time I saw it happening, I was like, oh, what's going on? All right, let me figure out how to fix this. Now I just preempt it. It's going to be delicious, though. And the the yeast starter, I put in an Erlenmeyer flask, and I had to create a stir plate, so I actually built my own stir plate, magnetic stir plate that uses a computer fan. I put some magnets on it, and then you put the potentiometer so you can adjust the speed of the fan and all that, on-off switch. And I made it out of a cigar box. So there's these old books on top of the cigar box, and nobody even knows what it is. And then you can flip the switch, and then the little LED light turns on the fan, and it's all blue and indigo, and it starts. Yeah, it's pretty cool. Yeah, you built one too. You got to, right? That's part of being a brewer. Is you get to build things. That was part of the fun. I built the kegerator. Yes. You know what? That's a really good point there. I was thinking about. See, I don't do many lagers, and lagers require a cooler, a cooler area to ferment, whereas ales can be a little higher in the low mid 70s. So I do more ales, and I haven't needed a fridge. But I thought if I did do a lager, I would do a fermented, because I did see those, because I almost made one just for the heck of it, because then you can store things too. But yeah, that could be. I heard it does, so that's probably the next one. That would be the next nice project to do, where you kind of, you can really regulate the temp. That would be nice. Yeah, that's something to do right there. That's fun. That's a fun project. But I did watch the YouTube videos on that. I was like, oh, that's how they do that. It's very smart. Netflix with a gap up on earnings. They estimated 64.7 cents. They got 64 actual. Gap up to recent resistance. Again, this one is just so strong. Oh yeah, and that IQ, that's the one you mentioned before. It's like the Chinese Netflix, right? And after an IPO, it opened, filled, and then bang, this bounce has been very aggressive. It's left behind this 1850 level. That's going to be an important level that if it returns to that zone, you might see it bounce pretty nicely. That's a pretty good zone that's beginning to develop. But that's a really aggressive move after an IPO. I mean, by contrast, Etsy. I mean, here's the IPO over here. It threw off a huge tail and sold off for a year plus. It took 3 years to get back to that point and still hasn't gotten there. So they don't all have to run up, So that's pretty aggressive, the way IQ has started. Yeah. And what Roku, that Roku comment that Kramer was talking about, they were asking him, hey, can the subscribers really subscribe to all the services? Is there really, is who's going to do this? Can they really subscribe to Hulu and Netflix and HBO Now and ESPN and anything else, Spotify? And he says, let me tell you a story. Over the weekend at the beach house, my daughters took control of the TV, and they're all Roku TVs, smart TVs, Roku TVs, and they have every single one of those services up and running. And the only thing that doesn't get any play in the house is the cable. And they always ask me, why do I pay for the cable? And he says, because you pay for cable. That's what you do. You pay the cable bill. And he's like, that circular argument is not working with these the younger generation here who's a rapidly growing segment here of folks that use this medium, this way to engage their entertainment. And that's exactly my story at the house. I mean, my house is a house where all the kids in the neighborhood come to already. But these are small kids from, 5-year-olds up to as old as 10 right now. That's the age that come through here. At any one time, there's 8 or 10 kids running around because my daughters, they're constantly knocking on the door for for our daughters to play. But if it's the weekend, we allow them to watch TV. We don't allow them TV during the week unless it's a family thing. So we let them watch on the weekends. So on the weekends, they'll take a break from the heat, come inside, and it's all Roku right away. And it's Hulu, it's YouTube, it's Netflix, it's HBO Now for any movies or whatever. And they, my youngest daughter's been doing that since she was probably 3. She's 5 now. And they get it right away, and they're not going to sit in front of a TV and watch live TV when they can't choose what they get to choose what they want. It's instant. And I think all media is going to be that way very soon. Everything else is getting phased out, kind of what Dale said earlier a little bit as well. So it's interesting, and what Kramer's point was, this is happening much faster than anybody thought or expected. It's a revolution, not an evolution, and it's happening much faster. And that's why I've kind of touted Roku a bit, is because that's been my experience, and it's still running higher. It's doing really nice. It's been cheap. Compared to what it was, it's half the price. It went 60 almost. Now it came back to 29. So it was exactly half the price, from 58 to 29. And now it's that's why I thought that LVN would hold and bounce, given the product and everything, and behind Netflix and everything, very strong. So that's a little bit what I was talking about in the chat earlier regarding with what he said, and it was exactly my experience, and I'm sure everybody with kids kind of can attest to that. And man, if my kids act up or do something, boy, we'll snatch the tablet and the smart TV access, and boy, they straighten out real quick. They're like, oh man, I already can't watch during the week. Now you're gonna snatch it from me. Or if I take their bikes away, they don't want none of that jazz. Got to teach them consequences, right? Amazon's looking really good, 1460, really nice. That's right. Exactly. Yeah, that's pretty strong right now. Shopify's been down big. Remember, this one had a big time aggressive move. We were looking at buy ops in here and in here. There was one that I was looking to get in. I forgot where now. They all look the same, but it shook me out. I didn't get in, and then it popped higher. But this one's been weak here lately, and it came back to the key range high right here, and now it's trading half above, half below. You can continue to see a little bit of that, but I mean, if there's any failure to hold the 112 LVN here, which is the lower 25, you start to rotate much down the range. So this is a very important support zone here. It's up big today, about 4%. Roku up nearly 9% right now, 35.87. ES NQ bouncing off of V Wep on a 5-minute. They didn't quite get there. The NQ didn't quite get there on the volume bar chart here, but very strong trending market so far. Early selling pressure at the open was allowing for a buy opportunity. I thought that the LVN would be the best spot there, but they bounced it pretty early here, so it's already pretty strong here. The NQ looks more bullish than the ES in my opinion, just because it didn't test V Wep here after the open. It just kind of pushed higher. The advanced looks a little more bullish. You can see the PIMAs are stacked and sloped, trigger zone being defended, LVNs being honored. So this is still a trending market. You can see R3, we're at it, but because R3 is sloping higher, you don't necessarily want to sell it. You want to look to defend pullbacks instead. If you do sell it, you got to know your counter trend, and you got to know that, you know, it's whenever you get a small move, you got to take that profit. Otherwise, it's likely going to get the stops run. I mean, all these counter trend moves are very, very small. The primary trend is at least double to triple the size. So things are trending up right now. If we look at the higher time frame here for ES, again, the 2731 level is the next major level up. We already have a 50% stop run day here, and it could continue. 2703 is the major midpoint zone. So ideally you would push through that level and close beyond it today. You don't have to, but you wouldn't want to push through it and start and close back below it. So you don't want to test it and then close back below it. I mean, you could, but ideally you'd push through it, close beyond it. Tomorrow would be a retest entry, and it would continue toward 2731. And again, any defense into 2703 from below could be a buy for a continuation toward 2800. So I think we could be looking at a move at least to 2790 to 2800 over the next couple of weeks if price can push through this 2703 and change the bias. So that's kind of the idea right now, but I'm not leaving the option off the table that this can't reject here and come back down. You know, that can certainly happen. Like today, I mean, if we push up here and then by the end of the day we've closed 2680, oh yeah, that you'd be going right back to the previous close perhaps with a retest of the low. So that's always something I'm looking for, is where is that idea wrong? Because yeah, I don't want to fall in love with the idea that we have to go here if the rejection occurs ahead of it. So that's just something I'm always looking for. So right now, very strong. ES 2731, that's the FOMC level. You have the NQ as 6917, and that's the level we're looking for as a test. Right here, 6917 quarter. The major level here was 6653.75, and 6653.75 is an important level because it is the midpoint of the key range. And I mean, look how precise that level's been. So ever since this day right here, which was February 6th, that 6653 became our target that day. When this low happened and we were powering higher, I said, okay, that's the midpoint we're going to test. And when we hit it, we got ourselves a key range. And then I said, ideally, price would come into this LVN and we'd bounce to here, and then we'd bounce up there. And of course, we came right into the LVN. It happened just 3 days later. Quickly, we were here. Fell just shy there, but look at the retest there. Right on it. Right back up here. This was spring break for me. I was in New Orleans during this time. But on that Friday, I did a pre-market report that said if we fail to hold 7K and the top of this key range, then look for price to go here, followed by all the way across the range. And so that was from that Friday, which was the 18th, I believe, or the 16th. Yeah, that was the 16th, March 16th. So you can see how price has just really honored this range. And that's what you want to see, and that's when you know you have yourself a legit range. Now this range could continue to build out. And there's nothing saying that we can't come up here and take out this high and then come all the way back and do it again, right? And still be overall in this range as it continues to develop. So I think the flow clearly right now is to the upside. You know, this ascending wedge starting to really go now. And again, any pullback into 66.53, as deep as that level, could still be defended for a push to 69.17. So that's kind of the flow that I'm using right now, kind of the if then else statement for the NQ and the ES on a swing basis. What's really good about this is that once you have that clear trend, you know, that's starting, you know, now pullbacks in the morning the next day become buying opportunities, then pullbacks the next morning after that, buying opportunities. You know, as deep as the pivot range, the midpoints, those types of things. Failed new lows become very important, right? What if tomorrow we come up here and we put in this little day like that? You know, then the next day could be a failed new low that launches even higher. So the entire bullish playbook comes at our disposal now as we start to really see a move develop and mature. So we'll keep an eye on that as it develops. Very, very bullish overall. Let's see, the CL chart right here. Again, the key range for this one I'm using is the smaller one right here. That's recently played out, which is a good size. It's not small, it's just smaller compared to what we'd seen before. This last one was pretty, the one before it was larger. There's the key range high, the midpoint is right there. Our idea was that this was a great buy to that edge, but the shakeout day shook me out. I didn't get in, and then it launched up here. But it was a great move. We knew exactly where it'd be headed. I just didn't trigger anything on that one, which I tried. But now we're holding above that level yesterday for several days, and now breaking back below. I mentioned it could be an opportunity to defend off the 65.07 as a retest, because that FOMC key level has been very important, the March level. It's also the previous month's close, that white dotted line, and it's 65 is a nice round number. You also have kind of a soft, lazy uptrend. So, you know, do we go even a little bit lower here and then try? You know, because we have a great channel that's in play. The idea is that I think we're headed to this level next, but I think we need a pullback first. And so that's why I was more patient yesterday, saying I think we go a little bit lower, perhaps as low as 65. But I wouldn't even put it past it to go even lower, given the current geometry of this pattern. You know, does it do this back at this level, below, trap, and then squeeze, right? You know, something like this could be in play. So with crude right now, I don't generally think it's a great idea to sell it, just because of geopolitical events going on. I think it's just generally safest to look to defend pullback zones and then try to get long. And so I think the general structure's to the upside. I don't think it's going to stop. Obviously, we haven't been above 70 in quite a while. So to nonchalantly think we're going to get here and here, you know, might be super bullish. That might be overly bullish. But I think that we can at least get this level. That's why I'm not shooting for up here right away. I think the next logical target would be about here, you know, on an upside basis. So that's why, you know, baby steps in terms of reaching these targets. I think the next one's a little bit higher, and then we might build out before we go even beyond that. So nothing says we have to get all the way there. We'll see how it develops. Even right now, we're seeing a little bit of a pop here. We just saw this thing pop as we're speaking. We drop down. Let's look at the intraday here. Look at this thing popping above value now. V Wep with a pretty strong move here. So this is the first time we've been above V Wep since about 2 in the morning. That's a pretty good little short-term reversal down here. So I would say 66.10 might offer an opportunity for 66.60. and you know, it could even be as high as 5-day VPOC 66.80. So any pullback to 66.10 could be an opportunity for a short-term bounce higher. I think a plus 50 could be in play at the very least. Retesting this level right here, which is the previous session's close. It's quite a bit of move there. I wonder if some tweet came out of some sort. Still trending up is the ES&Q. Now the crude oil chart has turned around. It's been an aggressive couple of minutes here. In about 3 minutes, this thing has gone about 65.95 to 66.35. GC2, eh? Pretty bullish so far. Great start to the day right now. On my typical watch list, Roku and Netflix are the highest right now. Roku up 9.6%, Twitter up 7%, Netflix up 7%. Tesla curiously down 1%. That's the only thing down on my major list. Oh, Sohu's down 0.06%. let's check that out. Here's Tesla. There's this one right here is 272.5, and that's an area that had a gap fill before. Oh, what am I doing here? Let me switch. Yeah, so right here, that's a little bit of an LVN right there. That's 272.5. There was a gap here where it gapped up, it gapped down there, and then over here was a gap, and then that was a stop run day, and over here was a stop run day. That's a pretty impressive level. I'm going to mark it. It's 272.5. Up here we'll call it CLVN. Click OK. Yeah, that's an impressive little level there. You can see stop run day, gap, 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 rejection, stop run day. So yeah, 272.5 is a clear little level there. Right now pulling back. Etsy's starting to climb back toward 30. That's what we talked about earlier. If it can get above 30 today, that could be pretty bullish here. You know, it starts a process of continuing higher. And so you'd be breaking back above these highs, closing back above this stop run mid, back above this low. Lots of things here. And you'd start to work your way higher. You also rejected off the market structure 29, previous high. That was taken out and now made support. You are also in the high intensity trigger zone, which is a very healthy trigger zone between the 8 and 21, which is my preferred bounce point in this market. You know, I used to be more patient about here, but in this market, you know, the spot between the 8 and 21 has been much better for the current intensity of these moves. So that's a zone where, again, pulling back into that area suggested another bounce. So we're starting to see that play out here. Lots of things very, very bullish. Again, Roku up 9%. This is Twitter with a move at up 7%, and it's starting. This is only beginning a move. They, I believe, were upgraded. Maybe Goldman, I think it was, upgraded Twitter. And you know, starting to show a nice break here through 30. If you bring up, say, a 10 period right here, we'll go yes, click OK. You can see on a 10 period basis here, we got very tightly compressed, and now you're starting to see the volatility pick up. And you know, that volatility, if it's released to the upside above 30, as it's doing right now, could open up a return back toward 34 to 35 rather quickly. 35 being a key level up there. 34 being prior support after price went offered. So this could be rather bullish here for Twitter. Twitter's made quite a move here. From 16 up to 36. Right before, I think, was it right before Prince Al-Walid bin Talal, right? They interviewed him. Price was about right here. So it was last October, September, October. He was on CNBC. He's also always very savvy. I mean, he's a billionaire investor, right? He owns and puts his money in all these stocks. And so, yeah, I always find it interesting to listen to a billionaire and what they're doing and what they fancy and all that. And he said at the time, he's like, with Twitter, we're in, and price right now is at our average entry. and at the time it was trading 17. He's like, we're at our average entry right now. We continue to buy, and this is about break even right now, but we think it's about to make a huge move. So it went from 17 and it doubled to 34, right? And that happened over the course of just several months. 17 here, 1, 2, 3, 4 months later, it doubled. But after he said that, Prince Al-Walid bin Talal, not a couple of weeks later, that's when bin Salman came in and arrested him and everybody else, right? And put him in the 4 Seasons prison. And so that was literally his last interview before, just days later, literally, he was put under arrest by the new crown prince. But it's doubled since that time. So that's incredible movement there out of this one. And again, this one had lots of accumulation before it finally went. And there was this earnings call here, I guess, that finally got the ball moving on that gap and run. So that was interesting there, the way that played out. But it doubled since he made that call that it was likely going much higher. And then he went to jail. Or whatever it is. Yeah, he wants his Twitter profits and then some. That's right. So, it's someone like him who accumulates. We talk about accumulation and distribution, and we talk about what does accumulation do. Someone who's accumulating a position, what they're doing is they're taking supply out of the market. They're taking supply out of the market. They're buying it all up, buying it all up, buying it all up. And as soon as a favorable earnings report comes out, everybody wants it. And that's when you can just push the stock a little bit and it'll start to run. You know what I mean? And on these moves is where he would sell some of that position. Sell some of that position. Sell some of that position. And then really start to sell some of that position until he's out. Right? That is the life cycle of a stock and how someone like him. That's why I pay attention when someone like him speaks, because they are the ones that we're tracking. They are the ones whose positions, is being built up in this area. They're the ones taking liquidity out of the market as they're accumulating that size, and then they're the ones that are distributing this along the way to everybody that wants it, right? Again, I always say it's like a convenience store. If you own a convenience store or any store or whatever, you get to decide what product you get to sell. You buy it at a wholesale price, and your goal is to buy it wholesale and sell it for as much as you can to your customers, right? Or whatever the case is, right? If you buy whatever, you want to sell it at retail. And the customer will decide what retail is as their demand drives price higher. You just got to buy it cheap. And so that is basically, in a nutshell, how that plays out. So that's why I pay attention. And again, that's one of those times where a whale came on TV, told you exactly what he was doing, and then you see the result now 4 or 5 months later. And just understanding that process, I think, is so very important. And I know many of you in here are very, very savvy and understand this. You hear me say things like this a lot. Some of you may be newer to the room, so this might be the first time you're really connecting that type of, trade participation or trade activity. But it's very important just to remind yourself of that process, because that's essentially what the market is. And, to a smaller effect, that's what happened to Roku here. It made its move down. It was accumulated ahead of an ESPN announcement, which somebody knew ahead of the time probably. And now you're seeing the results of that and the squeeze. That's, again, to a lesser effect here. This is just a short-term accumulation versus Twitter was a long-term accumulation. But it can happen in all time frames. So just a little aside there. Yeah, this one's holding right on V Wep, isn't it, Dwayne? CL right on top of V Wep and the previous session's low. between 66.05 and 66.10 is a zone you know price doesn't want to get back below. It could even get a little bit lower, but ideally bulls keep price above that zone generally speaking and walk it back up to 66.60. That's the plus 50 from 66.10ish up to 66.60ish, and it could go beyond that, but I think that's a high quality target from where we currently are. Failure to hold 66.05 opens up a return back toward recent lows. But market structure is so important, because market structure shows you who, you know, where the playing field is for that product or for that, you know, that market. That's what it's doing, right? It's showing you right now the market will pay between this price and this price. Overall, the market will pay between this price and this price. And then, you know, when it starts to go down, now it's going to pay between here and here. Oh, now it's here. Oh, it fails to go lower, so it re-auctions back through. Then it comes back into here. Now it's back into where it was. And if it breaks above here, then more times than not, you come back to here. Right? So, again, if this one holds here, the expectation would be the next spot would be somewhere here. And it's just all market structure driven at times, compartmentalized trading. It's not always that way or that clear. It's just, but sometimes when markets get into that rhythm, it's very clear what's happening. And this is a larger market structure issue here, where you have that and this. You drove downward and tried to go, and now generally speaking, now you're back above that low, which again usually drives you up to this high. So that's why I mentioned earlier the safe target's going to be about 66.60, but we have a chance to even go up to 5-day value and up to this level. Again, that could be a pretty significant move. But it's all dependent upon holding that 66.10 zone, right? It's got to hold that level. 66.05. If it can hold that level, then we go. Failure there, now this starts to break down and perhaps we're retesting. So that's kind of the market structure story on this one, and that's why I mentioned earlier 66.10 might be a good buy back up if it can hold that zone. APA continues to push higher. This was a market structure opportunity as well. Returning to 3660, opened up 41 with a shot at seeing 45. So this one continues to push higher. VLO remains strong. Yesterday was a huge day up. Huge day, closing, hitting a high of 106.35 and closing above 105s. Today it's been a perfect retest at the midpoint and higher. I mean, this has been an extreme release of energy here out of VLO. Exactly what we expected. And not only did we expect this at the beginning of April, but we actually were looking for a move into 108.48. So we still have more upside potential in this one. PBF continues to push higher. Again, this was a buy opportunity at the beginning of April here. It's continued to push up very strong, reaching new highs above 37 now. We also had CLR as a buy opportunity here, pushing to new highs and continuing to hold those highs. You know about Etsy. You know about Roku right now. Those are doing strong. Also, Southern is one that is getting going now. This one appears to be on its way to 50 now. Remember, this one was one that's been accumulated, and you just, again, you know exactly the story of accumulation. You see this rounded bottom right here. You can see That previous month's high, this white line, is basically the rim of this pattern, and now you're starting to see the initial push up out of this one. This could provide an opportunity for a long-term move into 50 right there. That's value, and this is what we mentioned before, because this has been on our radar at least 2 weeks now, and I mentioned value has now shifted down to this level, which means the accumulating party has successfully accumulated that position and taken liquidity out of the market, and now you're seeing it go bid. You're seeing the moving averages start to push a little bit higher right now, and again, if this one can continue to hold 45, so we might push into 46, pull back to 45, and then bang, go. But this move would take the better part of a couple months probably to play out, and then it could even see a move as high as 53, those recent highs. So, you know, this is very important. I think the long-term opportunity is to 50 here, and again, by the end of May, you could be there, but I would say, you know, I would go out probably the end of June. It might be a couple of months, 2.5 months. It just depends on how fast this one wants to wake up, but this type of pattern can be very, very bullish. So again, this could be one that you could play a little bit longer out and see how it goes, but I think the long-term potential on this one's really good with that strength. DVN right here, very similar deal where you know, you can see VPOC down here. That's where it's accumulated off of 30 the last couple times, major CLVN and key level there, and now pushing up. You see the moving average is starting to come up, especially the 8 to provide support. That could lead to more strength up. The idea here was that we could be getting back toward 37, 38 in this one. HAL is one that looks like Southern, but is about a week ahead of it. So this was another one that was rounded, and this is where we are right now in Southern on that bar. And then 1, 2, 3, 4, 5 days later we're here. So last week I mentioned on Tuesday this might be the day where we're breaking to the upside. I said the quick target is going to be the 52s, and then after we reach that, you know, we might develop and over time reach the upper end of the key range between 57 and 58. So again, this right here, that accumulation opens up more potential strength to the upside. You're looking for a defense, a pullback into the trigger zone, which is now rising very nicely to lend support. So this one is another one that's been on the watch list for a week that's starting to play out very nicely. SVU has not. This is one that is pre-stages. So, you know, whereas Southern is on the breakout day, HAL is basically 5 or 6 days in. This one is inside the range, still accumulating ahead of the breakout. And once it gets above 17, it's going to be a full-on rally to 22s. That could happen fairly quickly. We do have earnings coming up for this one. That might be the catalyst that sparks some sort of gap and run. But this one, SVU, this is super value, one that is currently accumulating. Godaddy is one that I mentioned before, looks very bullish, and it was basically on this day right here, the failed new low is where I said I think it's go time for this one. Failed new low, uptrend, and it's heading into earnings also, and that could provide a nice bounce to new highs. So you can see the last 5 days have been very good to this one as well as it continues to push up. So these are some of the candidates that have been on our watch list here over the last 2 weeks, doing quite well. This was one that we had back here, but I never took it off, so it's still holding. It's not really a watch list candidate on that side. Let me see. First Solar. This is one that I mentioned is coiling up again ahead of earnings. We do have an uptrend, and it's holding in the upper distribution of the key range, and so ideally you'd see something like this play out where this thing rallies. And again, heading into earnings, you know, you could be looking at 77, something like that as a rally. Right now trading 71, 61. So this one's coiling up and could see some movement. So it's not quite actionable just yet, but I mean it could be building ahead of time. So that's one there. This one we talked about yesterday morning. This is BLMN. BLMN is holding off the 22.5 key level. It gave us a great rejection tail yesterday, and had a big day up already, and is pushing up already the last 2 days. So this one's a brand new candidate just because of the rejection tail, how strong it was, also coupled with market structure support. All that suggested a return back up toward highs. Let me see. This is AAOI. Now this is one I looked at yesterday. This is one I'll be stalking long. Not actionable, and it's not a guarantee I even get in this one yet. I want to watch this one develop. This is AAOI, Applied Optoelectronics Inc. It's been a very bearish stock for some time. You'll notice it came right back into a CLVN though. So this stock over the last 5 years or so, there's a CLVN right there. You can see resistance, generally resistance in this area right here. Goes bid, takes off to 100. That's 26 bucks. It went and quadrupled in about 5 or 6 months. Then it fell all the way back to 26. Actually dropped a little below it, getting as low as 22.54, and now it's back up, currently trading 29. It's a big bounce from 22 to 29 very quickly. That's the high bird's eye view. Now if you drop into it, look how bearish it's been. Gap down, very, very bearish trend. Let's focus on just this part now. You can see how bearish this move has been. Every time you get into the trigger zone, sell. Trigger zone, sell. Trigger zone, sell. 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 This was a big gap down, sell. Well, now finally we gapped up through the trigger zone and closed right at the 55, and actually closing above the 55 over the last several days. Right now trading just below it. We had a failed new low yesterday. You can see this moving average coming up to provide support very strongly. The other thing is, here's the CLVN. I guess I can actually give it the true LVN. Let me see, what is that number? 75. 575. There it goes. And what's interesting is right here, price forms a little box below it and pops back above it. Additionally, look at the previous month's low. Opens below it, pops back above it, makes it support, and pops back above it. So it's a microcosm down here. This is exactly what's happening here. And so if we look and see how this was the rejection and price pops up, then it pulls back to it, that's the ideal entry. Same thing here. It's holding here, it pops up, ideal entry, 25.75. That level could be bought for a big time move up. Big. If this is a change of bias, if this is a change of trend, I mean, that could lead to a bounce. I'm not saying as high as 63.90. That might be too far and gone. But this LVN would be a market structure level that could be easily hit, and you can see that from the current low of the month, that's the target range for the month. That would put you between, say, 35 and 39, 35 and 40. Additionally, the bottom end of this range would be the next key target. There's a gap there. That's 55. I'd be willing to bet this over the next several months has a shot to get as high as 55. So basically a double from 25.75 up to 50 to 55. That could be in play for this one. So that's something to keep an eye on. Again, this is a very bearish stock. It's recently dropped from $100 back to 25s, right? 22s. So I'm not going to sit here and buy gung ho, but again, there's a great way to structure an option strategy for this. Again, you can sell a put credit spread, and then you can also buy perhaps some cheap out of the money options. Maybe you can do in this case, I'd probably do a call debit spread, and probably sell a put credit spread. Again, what I want to see is price get here. I want to see that happen, and that could provide a great opportunity for a bounce. So this is one to keep an eye on. I found this one yesterday and thought it was very interesting the way it's played out recently. Long story, just to show my thought process of how this one's played out. But again, I really like when the market honors certain levels. I really like when you see noticeable patterns, head and shoulder pattern here, great drop right into CLVN. It's a very, all these various things let you know that this stock really auctions well. And despite the fact that it's way sold off, I think it could be turning. So this is one that's brand new on the chart, but that's kind of a review of the buy list that I have. It's been an active buy list since the beginning of April when we did the stock picking webinar, and you can see it's definitely progressed. Roku up 11.5% now. Look at it, taking off. That's incredible strength. That's what a run heading into options expiration. Because I did the weeklies heading into the 420. Sorry, that's not the week. The monthly expiring 420 at the end of this week. You actually see, wow, that's probably the sold call. This is the 40. This is quite a move. You love to see that type of move. Like every single one of these buy candidates has really played out according to plan and what we thought. And again, that's the value of a stock picker's market. When you really understand how to really look for certain things and kind of find things that have a tendency to work out a certain way. The market has been, conversely, in those 2 weeks, this is what the ES looks like. It's not as pretty. Really hadn't done a whole lot, really, until the last couple of days where it started to move up. And we were able to find candidates that have really done well here during that same stretch of time. Now my sell list is completely empty. I have 0 candidates on the sell watch list, and again, that's not on purpose. That's just, it's a fluid process that's where it happens. It's basically, if there's more buy candidates, because I'm looking for both buy and sell every single day. But I've told you before that recently the number of candidates I'm getting is less and less. I'm not seeing great candidates. A lot of candidates. I am seeing certain good ones that we've just reviewed, but the number of candidates, of good candidates, has dropped significantly in the last 2 weeks. Additionally, let's see here, I'm looking at this. Additionally, there has been no sell candidates. I have been hard pressed to find anything sell side, but I don't force the issue. It just is what it is. And I've always, since, for 20 years, I've used an active buy and sell watch list to give me an indication of the general bias of the market. So just some thoughts there. Oh, VLO and the refinery margin. There's the refinery margin right there. There's the recent low, which is mid-Feb. And there's the recent low in VLO. Look at that. Early Feb. That's quite a chart right there. That's early Second week of February, this thing's bouncing right here. There's the second week of February, way up, and this thing is rallied to 19.85, the upper end of the range as it's been. The absorption in this one was off the 90 level, and now releasing that to the upside. Thanks for that view. BLO is the largest refiner in the US. Wow. Well, you could definitely tell. That's why I've been pounding the table about this one. This one had a very aggressive trending market. It was just super bullish. So when it formed this impulse range, you know, and then started to develop neutral, you knew it was about to release some significant energy. And I'm just very pleased that this has been everything you would want it to be. It's just incredible how strong that was. Here's LEN. LEN has some great market structure. We had it long on this day here, which was basically pre-market this day. And so basically a couple hours later, you know, it's already at the target. The idea was that we would bounce back towards 62s. That day it had hit a high of 64. The next day showed rejection here, and I mentioned that if it can close below the mid, I'd be looking to sell it back to the midpoint of that impulse move, but it didn't. It closed above the mid, and it got back there anyways. So again, you know, it didn't have to be perfect, and it made its move. So this one's clearly in a range between 56 and 62. This range could probably be moved up now based on recent action. So I think 62 is now wrong. I'm going to go up to 64 instead, because each of the last two major moves have been there. So basically that move and now this move also coincides with this, a change of bias. So 64 to 56 I think is the real range. Now I think we stay in this range for the most part. After you get a big aggressive move up then back, you know, I think it's kind of more solidifying this range. So I think we kind of stay in this range. I do think though the bias is mostly down, but that's just a thought. I mean, it has to break 56, but I think it has more of a likelihood to break 56 and drop to 50, I think, than it does pushing above 64 and going to 72. So my bias would be modestly down in that regard, but I think we mostly stay inside these edges. So I think this is a great key range right now to mark, and that gives you the major edges to play. So let me mark that key range right now. So anytime I'm looking at a chart, if there's a nice impulse move that develops, I always want to grab that key range low, key range high, and find the midpoint. So let's see, the key range low here is 55.48. Let's use this extension tool. Let's bring it up. The high here is 64.90. And the midpoint is about 60.19-ish. Alright, so that was 90. Yep, about right there. So that's your key range right there. And I think right now it's fade the edges in this range. Fade the edges back to the midpoint of 60 until proven otherwise. And then if we get expansion, you can see how that 50% coincides with the bottom of that key level 50 very nicely. 100% would be down here. So I think it works really nice. I think the 50% would be the major target on expansion. So that's kind of some of the analysis there, Vicky. Looks good though. I can't believe it rallied across the range in one day. Like, I was ready to get in on that one, but it opened with a gap up, so I said, okay, let me watch it for a second. see how it pulls back. But then the next time I saw it, it was already just wailing. Incredible. Here's a look at the. Yeah, here it is right here. So it just pushed back above it, held the 6610s. It's got a nice inverted H&S. Yeah, that's really, it's starting to look bullish here, riding across the top. Remember, 6610-ish gets you 6660-ish. That's a good high probability target. And then it has the shot to even continue higher into 85 to 67.95, you know, that zone, 66.85 to 95. So this is looking pretty strong. Held market structure as you would anticipate. 66.14 was the point. It hit 3 times on V Wep. I think Dwayne mentioned earlier that it was holding a perfect test at V Wep, and it did right there 3 times in a row and bounce. So very bullish right now. ES and the NQ continue to push higher. Remember, when R3 is sloping up, when this R3 right here is sloping up, you don't want to sell it. You want to look to defend pullbacks. When this R3 is sloping up, it's an indication of a price discovery phase to the upside. That suggests more upside behavior. Again, 68.17 is the target, and that's the FOMC key level. And if you recall, that's the level that was developed in March 21st. That could be a great opportunity to strive for that level. In one day, we talked about it could get there in one day. So if you look here, 68.09 is the primary target for the day based on 10-day average range. And 68.45 is the average daily range over the last 2 weeks, the last 10 days. And so if today's a breakout continuation day, you tend to see a move beyond that at times, right? You tend to see a move of about 125%. So 68.82 half then comes into question. Do we get that high? What do we do here? So, you know, progressively, I think we, 60. Well, let's see. Hold on. Yeah, Roku's still running. 69.17. Sorry. So that's what I meant. So if you get to 125% today, it would put you at about 68.45. So the ranges have shrunk here recently. Whereas before I mentioned, you might be able to get up there very quickly in one day. The volatility has really dropped, but we could get as high as about at least 125%, which is about 68.45. And then we have a little bit more to get to 69.17. So here's 68.82. Sorry, 68.45 is the 100. That's average. 68.82 is the 125. Man, I'm all confused. So yeah, that puts you very close up here into the 68.80s in one day based on 125. So you get close. You do get close. Very strong though. Etsy up 2.5. Roku up 11.5. Those are the biggest on the board. They've been the biggest on the board too for a while. Shopify's up 6. Twitter's still up and climbing. It was up 7. Now it's up 9.3%. Great breakout. Netflix up 7.8%. Big gap up and run. Wow, that's a big move up. And Netflix, that's quite a gap. They were talking about this. You know, Friday afternoons I really enjoy fast money. Yeah, that's when they actually talk. They actually talk trades on Friday afternoon when nobody's watching. But they actually talk actual options trades and options trades that for the next week and what they're looking at. And one of the guys was looking to sell Netflix. He thought he could get as low as 275 on earnings, and so he recommended creating a put vertical, so a put debit spread of 310, buying the 310 put and selling the 275. I didn't understand at the time, so I was like, why would he do that? And now you get a big gap up and run. So, and this was on the heels. They were like, well, last week you said this on this one, and it was also a credit spread, and it was wrong. He was like, yeah, well, that one, I'm going to hold on to it. It's only worth 40 cents now, but, you know, we'll see what happens. So what's your new one? Well, this is a new one. It's a put vertical on Netflix, and I was like, oh, it's going up, though. I just don't understand it, but yeah, that's an owie, because this thing is gapping in the midst of an up move. This is only the beginning. For Netflix, you got 382.92. That's the next near-term target, in my opinion. With this gap, you know, if it can start to negotiate through 333s, that's the top of the key range. That breakout opens the door to 382.92. And that's nothing to say of 430. 430 is the impulse range target. I don't think we'd get there right away, but I think it could easily get it as high as this target in, say, a month, 2 to 3 weeks. You know, again, dependent upon being able to find acceptance above the key range high. So this looks pretty strong. Again, anything can happen, but the way it looks pretty good here, the way it's playing out. So yeah, I didn't understand that. The put debit spread there. Buy the 310 put, sell the 275. And now it's worth 49 cents. But I do enjoy it nonetheless. I do enjoy it. You know, things happen. Got to make the call and put it on the table and see what happens. Roll the dice, I guess. But that's only on Friday afternoons. Like, I think it's only at the end of the hour too. I don't even know. HO. Oh, here's HO right here. Yeah, this one's setting up similar to crude oil, and I think your read is about right. I think it definitely on the pullback phase here, you can see it's just got into the trigger zone today, already showing a little bit of a bounce out of that trigger zone. But this pullback right into that area right here, very similar to crude oil, provides an opportunity to buy it. Again, like crude oil, I thought we might get a little bit lower to test, or even, you know, based off of that, maybe even lower. So I don't know where just yet. I don't see that trigger just yet, but it looks like it's actually trying to develop something, right? Like, say we closed above the mid today and throw off a signal here. You know, there could be a retest that could come off the 2.06 or something like that. You know, this 204 from here, you know, that, and so yeah, that's a zone right there that I definitely think the earliest bulls are looking to defend that zone. And I think it's somewhere around that area you talked about, 204, because it would be between this level, and I think that's about right. But if that zone don't hold, then I think there's one more below that could do the trick, you know. So yeah, I'm not sure where these stop for crude oil and heating oil, but this is generally the zone where you're going to see some of the earliest bulls come in. I think they're generally flowing higher. That could lead to a move at least into 215 too, right? The next LVN above is 215. It would take out that high modestly, and that could be a pretty strong short-term target. Yeah, let me change these two, and I'll do that. So here's this. Let's go there. Boom. I've been taking some chart grabs, so I have to change some of the colors on these. So let's see here. So anytime I'm doing, you know, a market structure kind of markup, or just a markup in general of these, I always like to go higher time frame, just kind of see what it is first. Roll it out and just see what the bigger picture is. There's an LVN coming into play here around 217. 218 looks like an area in general. Down here 1.4 and 1.8. So those are a couple of the big levels, and I can refine those, but I generally want to see where are the edges, where are the LVNs in a chart, where's value. Sometimes I can just stay in a weekly chart, a daily chart, but sometimes I'll go up in a weekly. So right now what I'll do is I'll mark this up here. Let me just mark that as a key level real quick. So that's going to be, let's go 2.6. We'll call that CLVN. Composite low volume node, there we go. That's an important level. So for example, since we are on the way up, I wouldn't really go beyond that level on a longer term basis. Like, that's a major level to hit from below. That would probably be the top for a little bit. Obviously values up here would need a significant push to 2.6, but that opens up 3 if it did that. So that's a very important level there on a higher time frame basis. If I come down here, the lower edge, about right there. So that's the lower edge of the zone, and then I'll do an intermediate zone about right here. So again, higher time frame levels, and then I'll drop down into the lower. Alright, so those are 3 major levels from a higher time frame perspective. Let's go to the daily chart now. You can definitely tell 182.65, that CLVN is a major market structure level here. The other thing I want to do is find a key range now, and I think this impulse sell-off and that bounce to the mid provides the key range that I'd like to mark. Remember, the key range gives us kind of the playing field, gives us the edges, the price, the absolute edges of that range to play, which tells us the absolute best spots to look to buy and sell, defend, targets, all those stuff built all into that one little move. So the high is 214.31. Grab that tool, bring it down to this low, which is 180.84. The midpoint is 97.58, which is about right there-ish. So that's about right. So that's my key range right there. Again, you can tell how price just kind of reacts to these levels. And now we have the levels that I need to work with, at least from this perspective. I could mark HVNs as well if I wanted to. I could mark the upper levels, but I think right now we got what we need. So that's kind of how I would mark this chart with the key levels. This is a good pullback into the trigger zone. 20 2.1431 is that edge. Yep. So that's it right there. Plus we have the FOMC key levels as well. Twitter up 9.6% right now. Yeah, my pleasure, Dwayne. Great breakout here. This one looking really, really nice. Roku's looking good. My wife's going to ask me why I sold so fast. Actually, she was in here with me ahead of time. I said, what was the goal? To get it on a pop-up here and just take that off. So I'm just going to go according to plan. The worst is for it to get up there, gap, and start to fill on you. So go according to plan and just be happy to take the money. Move on to the next one. Netflix with a nice gap. Holding, very good. Shop, looking good. Square. Man, I've been really hoping Square would move here at some point. It's been such a great mover, but since I've been really engaging it or looking to engage it over the last 4 weeks, it's done nothing as expected, so I've kind of held out of that one. NQES continue to push up. ES at 27.06 half. NQ at 68.04, highs of the day here, pushing higher. Looking quite strong. Again, our idea from the beginning of the day was that we'd likely see a pullback, be defended, and then you'd perhaps see a trend day start to develop as this thing starts to push through and work toward those March 21st FOMC key levels. Oh, F5. Let's take a look at F5. Oh, look at that one. Very bullish. Great gap and run. This is ahead of earnings. You got earnings on 425. Pushed through the 150, continued higher. I was actually watching this one. Yeah, same here, Dale. Yeah, I didn't get a piece of that right. I was actually watching in here when this came up on a scan, on a compression scan. Everything was stacked and sloped. So about right here is when I mentioned it in the room that it might be an opportunity to buy it ahead of earnings. So that was back in mid-March, but price never broke higher, never gave any rejection, and instead ate through the moving averages. So I kind of took it off the radar, and then bang, the thing just runs off. It actually got trapped below the previous month's low. That's that white line right there. So every time price got below it, it was an opportunity for bulls to absorb. Eventually the stops come out and you see the big squeeze. So I took it off the watch list. I had it here for a squeeze. It didn't play out according to what I thought it might do, but still nice move. Great strength. 160 today. 160.32 is the high. That's pretty impressive strength. We used to call this a measured gap. A measured gap would be a gap that, you know, you have a turning point, you rally, and then you get a big gap at the middle, and that would suggest that you're about to see probably a measured move of this much to that point, you know. I never really worked off the measured gaps that much, but something Ed Downs really believed in were those measured gaps. But that was a nice little move there, and the way it broke through 2-day highs, I think tomorrow's could be one of those days where you see a short-term rotation down. So here you run through 2-day highs, major midpoint right there. Usually what happens is if tomorrow opens up with a rejection of that high, you're usually going to come right back to the midpoint. That's 57.88. So if you're long in here and you want to continue to be long, but you know that you might see this pullback, this could be a short-term opportunity to play. Say you buy the 160 put, you know, and then all of a sudden it goes to 57, you can take it off the table there, right? So you can play the short term this way to protect against that move, taking off the table, and then you can actually add back at this point or the previous high. Somewhere between that point and that point, which is basically anywhere in the 57s, is an ideal opportunity to add back and look to take it even higher over the next several days. So that's an approach that you can play out here after this recent move. Very, very strong. Huge gap up pretty good here today. And again, tomorrow, so this is tomorrow, you could see a rejection here that leads to a short-term pullback to that point, followed by a defense and a continuation overall to the upside. But yeah, that's a really nice move there. I did not partake in that one. Again, that happens though. You know something's ready to go, and then when it's not ready to go, it just kind of messes around, and then it goes. That happens. I'd just rather not be a part of that mess. Find something a little cleaner. I'm really bummed about gold here lately. Gold's been one of my favorites forever to trade, and I haven't been able to really do much with it here in the last month plus because it's just been kind of compressing. I think this is kind of the calm before the storm. I think gold can be seen, could see a major expansive move here pretty soon, so we'll keep an eye on that one. But and I think it's to the upside. Here's a failed new low. I mean, this could be ahead of a major push up where it just takes 1375 and just crushes it. Be the first time in a while that would happen, so it would be significant. Quick update over here, just very, very bullish. Again, we were talking about how high can this go today for the NQ. Since it's a price discovery phase, you can see how bullish it's been. Look at R3 continuing this trend up. The idea is that 6809 is usually the primary target, but on a price discovery day, a trend day, not only could you go average range, which is 6845, but you could even go well beyond it, which is 6882. That'd be your 125% target. So on an average basis. So this thing has been very bullish. We had the right idea early on. Didn't quite pull back as low as we thought it could. It never even tested V Wep during RTH. At some point today, it will likely form some sort of top and kind of develop at highs. Ideally, you want this day to close near the highs of the session, usually in the top 15% of the day's range. When that happens, again, it's usually right in line with a trend day structure. You can watch right here. Let's see if I bring up this right here. We're looking at, say, the NQ. And so here's a look. That's a little bit too zoomed in right here. So you can see this upper indicator right here. You can see today. Here are the stats for today. Right there. It's 89, almost 90% of body. That's what you want. And on a day like that, you typically close in the upper 15% of the day's range. If you look at it every time it's this big or more, right? You can go like to this day, it's closing near the high. This day, it's closing in the upper distribution. This one's closing in the lower distribution. This one's a big one right there. This one's closing in the upper distribution. Each of these two, very close to the bottom. Any of those big days, you're usually closing at the extreme of the day. on a day like that. And so understanding that and knowing that knowing that tendency has high odds of playing out, you can then be more aggressive on days like that to let the trade play out, let this thing go. You know that this is going to continue higher throughout most of the day in most cases, not every case, but most cases. And again, that type of day can continue to see expansion. So at some point though, we'll top out. We'll probably consolidate at highs, but close near the highs of the session. So looking very, very strong right now is these markets. So we've seen a nice continuation to the upside here in the ES and the NQ. As we mentioned earlier, in a day like this that was at least beginning at the time, the idea was that we could turn into a trend day structure up and start to push higher, given where we were in the daily charts. You can see here how this was quite bullish overnight. Actually, right after hours, Roku popped. Netflix was moving higher. So everything was already started in motion yesterday. But the idea early on was look to defend the first pullback. After the open, the market pulls back, but didn't quite get to V Wep and races higher. R3 starts to slope up significantly. Again, that's an indication of a price discovery phase. We mentioned look to buy pullbacks to the PIMA trigger zone, which is the space between these two moving averages. Additionally, look to defend LVNs, right? Look at all the LVNs that get left behind in a unidirectional trend day. And that's an imbalanced phase right there, imbalanced phase. As this thing trends higher, usually you see pullbacks to these moving averages and to the LVNs. And so that's typically your spot to defend, all up and down the line. The idea is you usually see on a day like this, if you do see full-on trend day expansion, typically speaking, you would see a move that takes you beyond average daily range over the last 10 sessions. So average daily range would be 100% ADR. So from the day's low, if you measure up 100% of ADR, that's going to put you at the 100%, what I call the PivotBoss ADR target. And that puts you right up here at 68.45. So that's your 100% target there. That's an average range target. Obviously, for those of you that have been in the room a while, you know that the PivotBoss primary target is this 75% target, so 25% lower than this one. So whenever you find the low of the day that you think the low is in, you can then measure higher 75% of average range, and that's going to give you a high probability target that also maximizes the move. But on a day like today, where expansion, price discovery, trend day structure all develop, usually you not only make it to this target, but you go beyond it, the 100%, because it's an extraordinary day. It's a bigger day. It has more intensity, more volume. And so that's why we mentioned right out of the gate, not only could we get to the 68.45s, but we could get perhaps as high as the 68.80s, because that's where the 125% target is. And it could be 2 days before we get to the 69.17s, which is basically the FOMC key level from March. So right here you see 68.82 half would be your 125% target. Here, this is an automated function I did in IRT, Investor RT. So it says here 69.14 quarter. It's actually 69.17 and change, but that's close enough. So nice trending structure, very bullish. I don't see it really slowing down right now, but at some point, perhaps after lunch or heading into lunch, we will see a top come in. We may see a deeper pullback. So basically, say this thing tops out here, it could do something like this, followed by bounce back up, and now we trade sideways heading into the close. But it will close likely in the upper 15% of the day's range. That's based on general odds. So for the most part, we have a pretty solid day that's continuing to play out as expected. And in terms of crude oil, though, this one has kind of flown off the handle a little bit. We were expecting more of a pullback, perhaps towards 65. Let's see here. We're seeing some weakness at the moment and lower highs heading into 68.10. So we were looking for 68.10 to 66.10 to 66.05 to be defended by bulls. Actually got a little bit lower than that, and then right now coming back and trying to make it support that zone in general. Remember, that's a market structure zone that we've been talking about here. And you can see how this thing is pushed higher off of it. It tried to make a support several times, which was very good, and that was bullish, because our idea was if this thing can hold this zone, it could go to 66.60s. 61 was R3 at the time. However, whenever you get multiple tests like this and then price pushes higher, if that high fails and it comes back again, now it's a lower high, well, now these bulls aren't getting paid. They're actually getting paid less and less, and that's when you start to see this thing become heavy. You start to see perhaps some stop run occur to the downside, and so you see these lower highs coming in and prices trying to hold below V Wep. So you can definitely tell there's a struggle here. It's gotten very heavy. It is back above the 66.10 to 66.05 zone, and that's kind of the key level right now. That's the pivot heading into the close. Holding above that zone could retest these highs and perhaps finally get the R3 with a shot at continuing even into 5-day VPOC. And failing to hold above that zone opens up a retest back toward recent lows. So that's the idea as we head into the close for crude oil. Very nice movement overall today. Again, something we kind of were looking to play ahead of time. We knew that we had some earnings coming up. We knew at the market generally, especially tech, has some, has been fairly good overall. Even and a lot of times they're at beaten down prices here, but still above composite VPOC in Visual Trader. So we've been looking at that, especially those FANG composite stocks. It's a pretty powerful view when you look at it from that perspective. It gives you a really good sense of value and what everything looks like. So if you look at this view right here, here's FANG, the composite, which puts Amazon, Google, Netflix, Facebook, and Apple together and creates its own composite chart. It was at value at 600 as a composite a couple of weeks ago to begin April, and we noted that. We noted that here as well when it pulled back initially in February, and both times were buying opportunities. And again, we weren't gung-ho about it, but we were cautiously optimistic that this thing could go, but things needed to happen. I thought a recent rejection of lows needed to happen. It did happen in some, like Google, not in others like Amazon, but overall above 1460 today. The idea was above 1460 would lead to a stop run and could get us going to 1550 to 1560. That was what we called yesterday. So yesterday in the premium replay, you can go back and play it. I mentioned above 1460 starts to squeeze about 100 handles back toward this red line. And today is a very bullish start. Tomorrow, a retest of that level will be very important. So 1460 retest could be a buy opportunity for a continuation. So very strong movement here out of tech. You can see Google, Netflix, they're all really strong today. So not bad at all. Again, we were ahead of the curve on this one. And Roku continues to deliver here. I got out shortly after the open, but up over 11% at one point. Great breakaway. On this day back here, we mentioned the primary idea was that we would rally toward 38 to 40 by the April 20th expiration. And you see that move. And the entire time, the idea was for the in the money call to get a quick pop and then just go ahead and take that one off and sell the put credit spread the rest of the time. And so, today was the pop, take it off. still holding the put credit spread that I sold way down below, and we'll let that one expire worthless. So that one's worked out really well. Twitter's up 10%. I mean, that's been a huge day, stop run day, full on 50% stop run day. Anytime you have a stop run day, yeah, even Facebook, that's right. Even Facebook's up today. That's how bullish today is. So if you look right here, stop run day, I define a stop run day simply by the midpoint being at or beyond where the stops come out. You know, it's that type of big day, right? It's a huge day. That's major. That's a breakout day. We already noticed how this was compressed. We saw it on some of the compression. If I put this on a 10-day, it was compressed about here. So we already knew that there could be expansion, but this stop run day right here, again, very similar to Amazon, offers an opportunity to defend back at this level and rally this thing perhaps as high as 34 to 35. That was the idea earlier. You can see today still running and up, and 10+% right now. So really, really sharp stuff here. Netflix looks really strong. Now this one is above the 333.99 high. Remember, I mentioned before that this looks very bullish and opens up the potential to see a move into the 50% target. That's going to be 382.92, and that could be seen in the next 2 to 3 weeks. So this is a solid breakaway gap here, major stop run. If we close above that level, it would be significant. We could still see a pullback, failed new low, any type of thing that could get us into that zone. So that could be as easy as buying the 340 and selling the 380 and calling it a day, right? So you could do a long call debit spread, buy 340, sell 380, and work that way. You can do so many different things, but the idea is this could be the beginning of a push to 383. But yeah, that's right, Dale. It's boom time, baby. That's why I love it. I love these types of days where you get lots of movement, but again, we anticipated it ahead of time, and we did it through our trades and the trade ideas that we had on the board. Etsy's even coming around again. This one's in the money and working higher. Mentioned yesterday, if it can get above 30, it really starts to run. This is the extreme reversal again, right from my book, Secrets of a Pivot Boss, Chapter 2, an algorithm I wrote so long ago that has continued to deliver based on pure dynamics, market action, price action. When price is very strong and it gets a major pullback and sell-off, it becomes the best buying opportunity. Slingshots in the opposite direction. And so this looks good. And again, the idea was to perhaps look at taking this one off around 31.98, but as high as 34 to 36. So I wanted to hold it at least into this May earnings. So watching this one and seeing how it progresses, but looking for at least one more wave higher out of this one. So a lot of great stuff in the market today. We'll continue to watch this. Again, I appreciate all of you for being here this week and today. Thanks for hanging out. I'm going to go ahead and call it a day there. We'll be back at it again in the room tomorrow. Everyone have a fantastic rest of your day, and I'll see you all soon. Take care, folks.